Hey, what's up? It's Wade with Trade ATS. Welcome to this week's video where we go over our picks and the things that we think are interesting and could be shaping up for some good trades. I got two different things to share with you, so let's get right into it. So the first one I got for you is Aussie yen. Now this is a little bit longer term of an opportunity than we typically look at, but over the next few weeks to a month, I think there could be some huge potential to the upside in this pair. So let me explain. If we look at the daily chart right here, you can see that we have our last predominant value point right here. We had fair market value established right here. We have our expansion line, or that value line, painting forward. So our minimum expectation on this trade is to get from where we are roughly right now to the value line, which is roughly, it's almost 200 pips. Now that line, if you want to take note of it, is about 96.134 roughly. So if you're not running our software, that's a level that you really want to look at to get back to minimum. Now, when we get up through that level, I think we could have a pretty big explosion to the upside. So if we look over at the weekly, you can see that we are under ATS trend right here. If you see that line right there, and we're holding some wicks through that. Now, this typically could signal a downtrend. That could be the case. This could be the start of a reversal. But if we go up to the monthly, the higher, more powerful time frame, let's jump over and take a look at that. You can see that the monthly has just gotten a fresh ATS trend to the long side. We're also starting to look like we're settling above this value point on the monthly right here. So if this thing just pushes up just a little bit, it could have an explosion to the upside. If we go to our order block projection up here on the monthly, you know, that's like over 1,000 pips away. So it could be primed for a big move to the upside right now, and this could be some great entry right now to start building a position in. So if this monthly holds, if we go back to the weekly, then this is going to be temporary right here. This is going to be a little bit of a breath that we came down through ATS trend right here. And I think that these two candles are pretty weak to hold a downtrend. Now, I could be wrong on that. Of course, nothing is certain, but I do think if this comes back up through, we're at least coming to the high right here, which is 350 pips roughly away, and then we could be easily headed to the all-time active high right here, not the all-time, but this last predominant high back here, which is like 435 pips away. So risk to reward on this is pretty good. So how do we manage risk on this opportunity? Where's the point where the entire idea falls apart? We need to find that point. So I'm looking predominantly at this level right here, this expansion line from the past. You can see that we came down, traded to that. We had this aggressive candle that traded down through the expansion line, didn't get price acceptance below that, and it's still wanting to trade above. So I'm really looking to see from this point on that we really maintain above this line. I really wouldn't want to see it trade through this line and hold much below here, especially after the clues that we've had on this. These candles, this one and this one, they've all traded to the line and right back up through. And so I'd like to see progressive movement to the upside pretty much from now on. But my risk is going to be, you know, basically generally down in this area right here ultimately. I really don't want to go farther than that. Also on the weekly chart, you can see that we're holding this value point as well from right back here, from fair value established back here. So again, I really don't want to trade much through that level on the weekly. I'm really looking for these blue candles as well to hold on the weekly and work our way up. So that's kind of my general risk profile. What is that pip wise? You know, you're looking probably ultimately realistically somewhere between 150 to 200 pips tops on this opportunity. But again, this is if this thing goes and you get up through value right here. Just coming back to value from where we're at right now is 200 pips. And if we get up through that, again, I think we could see a pretty big move to the upside. Everything is primed for it on the higher time frames. So this one's really set up well. So we'll see how this one starts working out over the next week or so. And my second pick is NZDCAD. We'll first take a look over here at the weekly. You can see that these wicks traded up right through ATS trend, and this is a pretty fresh confirmation to the downside. We're 3 weeks into it. So the fact that it didn't want to hold price above that is a clue that we could be headed further down. So we're definitely looking at that. We jump over to the daily chart, and there's some other noteworthy clues here. So if you see right here, we have a fresh expansion. We jumped out of this box, held previous framework right here with this, not only this wick, but also this wick on the daily, and had an aggressive turn off of that. And now we're gapping through this value level right here. So this is great progression that we want to see. Now, what I'd like to see from this opportunity going forward is that we continue to pretty much trade below this level. I don't want to see too much trading up into this neighborhood here. I want to see immediate progress to the downside. For an initial profit target, I would aim for this order block projection right here and potentially this value line. And if it really takes off, you could aim for this order block projection that is layered over previous liquidity down here. So there's some confluence there for that profit target. Would definitely want to see that. Now, I would not just jump into this trade as it sets right now, because we are missing one important thing, and that's over here on the 30-minute. And whatever you use for entry, you could use the 1 hour, you could use the 30-minute, some even use the 4 hour to enter. That's up to you, but we're gonna go off the 30-minute because it's a good middle ground. What I don't have over here is I don't have framework to manage risk from. So what I'd like to see is I'd like to see a fresh box. I'd like to see a fresh expansion line, and I'd like to trade above that so I know that I'm getting an overvalued entry in an expected downtrend. Now, let's talk through a quick scenario. If we do get that framework, we do get that box, and we just explode to the upside, we should be patient at that point, because this still has the potential to trade back up through this level. So part of waiting for framework is making sure that doesn't happen. We want to see that framework appear, we want to see that box form, and then we want to see that the market is holding in and around that value level. That further confirms that we're establishing price at a lower value in the expected trending direction. So we want to wait for that progression, not just jump in right now. That could put us in a bad spot, and realistically we could gravitate all the way back up into these value levels back here if we don't establish new framework down here in this region. So be patient for that. So that's what I got for you this week. Make sure you trade safe, make sure you form your own plan that makes sense to you going forward. Remember, these are just suggestions, but I do think there's some good opportunity in these two different pairs this week. That being said, have a great rest of your week, and we'll catch you on the next video.